So from time to time, as you know, I am right. Not necessarily on the times that I want to be right, but this week I said Tesla would be going down marginally all week, and it has continued to do that this morning. Last time I checked, it's down a couple of bucks. The market is down pretty rough this morning too, with bonds continuing, the yields continuing to go crazy. They're now at 4.256 on the 10-year. Who would have thought? Well, I got a few thoughts going into today's earnings report. I'm not sure what I'm going to do later today. I might do a more thorough analysis of the earnings report later in the middle of the day, or I might do something completely different. So I'm not 100% sure. But let me just give you this. Once in a while, I get it right, as I just said. I said that Tesla would be, going down this week. But today's earnings call is going to be, as always, more than just about the numbers, okay? The Tesla stock right now is down because people are worried about the numbers. They're worried about 3 or 4 different numbers. So in order for Tesla to be up tomorrow, based on the numbers alone, they would have to beat on basically auto margins, operating margins, and EPS, all three. If they miss on one of those three, then they will be down tomorrow if it was only about the numbers. Very low odds, I think, that they're going to beat on all three of those, that they're going to satisfy the market on all three. But even if they were to beat on all three of those, the expectations are that Elon is going to fill in some of the missing blanks from the 1010 deal, and in ways that will be useful and inspirational. And I think there are low odds of that, because during that earnings call, there's so many opportunities for just one of the comments to be something that the market latches onto and takes the stock down. So it's very, very common for Tesla to be down after the earnings call. I would say for those of you who have dry powder, this will probably be the lowest you're going to see Tesla is going to be tomorrow morning, sometime tomorrow, and in the next couple of weeks as the market digests whatever does happen in that earnings call today. This is from Business Insider this morning. Tesla sold almost 17,000 Cybertrucks in the third quarter. 17,000 Cybertrucks in the third quarter, according to Cox estimates. That makes it the third most popular EV in the United States during this period. The third most popular, of course. What are the other two? Oh, the Model 3 and the most popular EV in the world, and the most popular car in the world, the Model Y. So far in 2024, more than 28,000 Cybertrucks have been sold. That's more than Ford's F-150 Lightning, Rivian's R1T, and Chevy Silverado, according to Cox data. Given the reports of the Cybertruck's troubles, its divisive design, and negative reviews, these sales numbers are surprising. It's been about a year since this wild-looking vehicle went on sale, says the story. In December 2023, I examined Wall Street expectations. At that time, Tesla was expected to sell about 48,500 Cybertrucks this year. That was an average of forecasts from analysts at Goldman Sachs, Morgan Stanley, UBS, Bernstein, and Wedbush. Tesla would only have to sell about 20,000 or so Cybertrucks in the fourth quarter to hit that target. It might actually do it. In fact, if the rates that we've heard recently of over 2,000 per week are true, they would sell 26,000 vehicles, 26,000 Cybertrucks during that period. And that would certainly put them over 50,000 for the year. And in fact, my guess would be that the ramp is continuing up. So we might be looking at closer to Larry's original goal of 75,000. Well, we'll see what happens on that one. I've got an anecdote for you, and I know we're not supposed to pay that much attention to anecdotes, at least as far as evidence goes, but this comes from Richard Datwitter. He says, replying to me, Tesla Osborne their entire lineup for me when they announced the Cybertruck. I didn't buy anything for 3 years until they emailed me that my Cybertruck was ready for pickup. Yahoo. Tesla, this is from the Yahoo, I think, business. Tesla will need to sell more than 516,000. I've been saying that. I think I said 515. 516,000 vehicles between October and December if it's going to beat last year's number. And last December, it sold 484,000 units. Uh, I'm sorry, it was in the third. I mean, to beat his best ever performance of 484,000. Analysts currently expect deliveries of only about 472 for the fourth quarter, according to a handful of estimates compiled by FactSet. That would put total deliveries at 1.76 million, or a slip of 2% year over year. Deliveries could miss by slimmer margins, according to 18 analysts polled by LSEG, who thinks it'll be down only 0.3% year over year instead of 2%. Wall Street will also be eyeing Tesla's gross margins as the car maker has slashed prices to boost demand. In China, Tesla has introduced a series of incentives, such as low-cost financing options to drive demand in the competitive market. Now, remember, it's not just going to be about margins. It's going to be about the average cost or average selling price, ASP, the average selling price on the vehicles, because the lower the way that Tesla is offering these 0%, 1%, 2% deals, that does not impact margins. It is taken off of the selling price. So you may see the average selling price going down. Margins might end up being okay because it's not coming out of the cost of goods. It's coming down, it's pulling down from the average selling price. Analysts expect Tesla to record gross margins of 14.7%. I think Larry Goldberg said he's at 13.5%. For the July to September quarter, compared to 16.3% a year earlier and 14% during the second quarter of 2024. Wall Street wants to see the margins inch closer to 20% ahead of 2025 to renew confidence. Yeah, I'm sure Dan Ives would love that. That's according to Dan Ives. So edging closer to 20%. I don't think we're going to see anything close to 20% this year, not in the fourth quarter either. I think it'll take until, and it's going to take one thing. I keep saying this. It's going to take one thing. FSD has to be 100% unsupervised. We need to start seeing this key metric head into the high teens for third quarter, fourth quarter to give the street comfort. Much of the price cuts are in the rearview mirror, showing better margin days are ahead for 2025. Ives wrote Monday. Well, I think Dan Ives is really smart. I don't think that this is very smart. The average Tesla sold for 58,212 last month, according to Kelley Blue Book, though these figures are heavily skewed by the Cybertruck, a pricey electric pickup truck. I don't think they're heavily skewed because they didn't sell that many compared to Model Y, Model 3. As Tesla's backlog of reservation holders appears to be largely holding off buying the expensive vehicle, yes, that's true, till it gets down to the right price. Earnings per share are expected, but they're still selling every one they can make, obviously, at these higher prices. Or they would lower the price, obviously. Is this obvious, or shouldn't they said that? Earnings per share are expected to hit 60 cents, down from 66 cents a year ago, but up from 52 cents last quarter, according to FactSet. Revenue is expected to reach $25.4 billion, compared to $23.3 billion in the third quarter and $25.5 billion during the prior quarter, meaning quarter two. So all of those things, I think we've been talking about that for days. The range now seems to be Larry at the low end, 48 cents, all the way up to 60. Some people are above 60, obviously, but I don't know who they are. I would say that that is the real range right now. So, but the 58 or 60, depending on whose facts you're believing, is what the street is betting on. So it's going to have to it's going to have to beat 60 cents in order to satisfy the street. It's probably going to have to hit something like 15.5 on the margins. But again, we've got all these different numbers coming in, and what is the street going to believe? Analysts expect Tesla gross margins of 14.7 in terms of automotive margins. Okay, so then Sawyer Merritt says this. He says, news is this: EV market share in Colorado. EV market share in Colorado hit 21.9% in the third quarter, an all-time high. And of course, the Model Y was the number one best-selling EV in the state and the third best-selling vehicle across all products. There you go. It's happening. It's just a matter of time. 12 months from now, you'll be laughing at what happened this year. The Humanoid Hub says this: David Rieger, CEO of Neura, was impressed by what Elon presented at We Robot, given the rapid progress. Now, Neura is also developing a general-purpose brain for robots, including humanoids. David believes robots will handling tasks like cleaning up a house within 2 years. Well, there you go. I'm not sure. I'm thinking house cleaning might be a little further out, and you know I'm the optimist, but I think we will have significant activity in factories next year, and it's going to blow people's mind. This is Randy Kirk. Hit like and subscribe and notify what's going to happen today. Well, as I just mentioned a minute ago, I don't know what I'm going to do midday today, but it will be fabulous. And then the after show, the after earnings report, I'm going to do that this year with, well, actually this quarter with Brian Wang. I believe I did it with Brian Wang last quarter, and it was fabulous, fantastic, unbelievably good. Brian was a super analyst, and I think you'll enjoy it again this time. From Seth Abramson, oh, by the way, did I mention Patreon? And thank you for that one person who joined my Patreon in the last month. Come on, you guys. I mean, it's $3 a month. Seriously? Major breaking news. CBS News analysts reveals that clear majority of tweets by Elon Musk about the 2024 U.S. presidential election are either misinformation or disinformation. Did you hear that? CBS News is saying that Elon, the vast majority of his, the clear majority. Well, then if CBS says it, I believe it. How about you? Let me know in the comments below. Business Insider has this morning. Recession fears have loomed in recent years after consumers were hit by soaring prices for food, fuel, and other basics, and steeper monthly payments on their credit cards, car loans, mortgages, and other debts. It's been tough. Small businesses, regional banks, commercial real estate, and other sectors have been squeezed. Housing, transportation, yeah. However, key indicators such as the GDP growth, job numbers, and retail sales have proven resilient to the tough economic backdrop. I wouldn't say the job numbers have. Inflation has cooled from a 40-year high of more than 9% in the mid-2022 to below 3% in recent months, unless you're counting core inflation or super core. The Federal Reserve has also pared interest rates in September and signaled more cuts are coming after raising them from nearly 0 to north of 5% between March 22 and July 2023. Schwartzman, the president or CEO of Blackstone, that black thing. Yeah, that's Blackstone, Blackwood. Oh my goodness. Anyway, his private equity behemoth has about $1 trillion in assets under management, predicted a brighter backdrop for striking deals and existing bets as rates fall. It's really about interest rates and economic growth, Schwartzman said. Interest rates will continue. BlackRock, that's what it is, BlackRock. It's really about interest rates and economic growth, Schwartzman said. Interest rates will continue to go down, and that will provide an impetus of more transactions both on the buy and the sell side. I'm not sure interest rates are going to continue to go down, but we'll see. They might, at least in November, but after that, even then, I think it's shaky. The Wall Street billionaire said in 2022 that he wouldn't support Trump's re-election bid, but he reversed course in May, bemoaning rising anti-Semitism and saying that U.S. economic, immigration, and foreign policies were headed in the wrong foreign policies. Our when he says it, now I can't say it the right way. Trump has proposed extending tax cuts he made as president in 2017 that are set to expire. And I haven't heard anybody ask the other side what they're going to do about those tax cuts. Earlier, they said they were going to let them expire. Reducing the corporate tax rate to 15% for manufacturers. This is what would happen, would be eliminated, is the tax rate of 15% for manufacturers, eliminating income tax on Social Security. Oh, I'm sorry. Trump has proposed extending the tax cuts and dropping corporate tax rates to 15% for manufacturers, eliminating income taxes on Social Security benefits, scrapping taxes on tips, and other measures that would boost growth. I totally think that the Social Security tax is a complete, horrible, stupid idea that makes no sense. You're paying taxes on the money you put in. Vice President Harris has suggested expanding the child tax credit, earned income tax credit, and small business tax deductions. She's also proposed giving up the $25,000 in financial assistance to qualified first-time home buyers while backing an increase in the corporate income tax rate to 28%. Doesn't sound very positive to me. The Fed challenge, according to this article, a key challenge for Fed officials now is ensuring inflation stays under control without choking growth. They have got to make sure they don't go too hard now, according to Bank of America CEO Brian Moynihan. On Wednesday, he told Bloomberg, adding that the central bank risks cutting too fast or too slow. Thank you so much for that wisdom. Echoing Schwartzman, he said, with an unemployment rate at 4% and wage growth at 5%, it's hard for an economist to convince the world that there's going to be a recession. I don't know where he got these numbers. Wage growth is at about, well, I guess it's between 4 and 5%. Meanwhile, BlackRock, that's the right word, and I said it right. Larry Fink said, another one of BlackRock's guys, said that this week that the election doesn't matter to the long-term market outlook, which is what I've been telling you as well. It may determine how fast the market picks up next year, but with the Republican, a complete change in government, probably having a stimulus effect earlier, then continue on more or less with the same guys in charge. So that's what I said. That's what I believe. We'll see whether they and I are correct or not. Well, okay, Coca-Cola beat today, but I'm still trying to wrap my head around this. This was kind of a shocking story, and maybe you'll get this, maybe you won't. Let me know in the comments. They sold fewer units, but they increased prices, and that helped them beat on both revenues and profits. So did the increased prices reduce the unit sales? Well, Economics 101 would say so, but maybe they deserve a round of applause for the proper reading of the supply-demand curve. I mean, they seem to have gotten it exactly right by raising their prices, selling a few fewer units, but then winning on both revenues and profits. What do you think? I think maybe they should get a Nobel Prize. Breaking, lots of useful info in this new home sales report coming from MarketWatch. Now, this is going to be about new home sales, but it tells us a bunch of stuff. Here are the numbers according to MarketWatch. Home sales fell to the lowest level in 14 years as high home prices and uncertainty about the upcoming presidential election spooked home buyers. What else was happening? We continue to have no inventory. And where are we now? We're in the fall, okay? So got to keep all these things in consideration. Sales of previously owned homes fell by 1%, didn't fall that much, to 3.84 million. That is an average, that would be the total for the year. And these numbers are seasonally adjusted. The existing home sales figure in September sank to the lowest level since October 2010. The pace of sales met the expectations of economists surveyed by the Dow Jones Newswires and Wall Street Journal, who predicted the sales would drop to this level. Compared to September 2023, home sales are down 3.5%. Now, the median price for an existing home in September rose 3% to $404,500 as compared with the year before, and that's the highest price on record for the month of September. We know this, of course. Home prices are about 50% higher than the same period 5 years ago. About 1 in 5 homes were sold above list price. This is very important. The NRSA, which was unchanged from a month ago. Homes received an average of 2.4 offers. 2.4 offers, average of 2. So that means, quite frankly, the real estate market is still strong for the month of September. Strong. The total number of homes listed in the market rose 23% from last year to 1.3 million units, which is still ridiculously low. there's a 4.3 month supply, which is ridiculously low. It says it's a balanced market, but it's a balanced market if you're looking at the last 15 years, not if you're looking at history. Listed homes remained on the market for 28 days on average. That was up from 26 days. Ridiculous. Sales of existing homes fell across most of the country, with the Northeast seeing the biggest drop of 4.2%. All cash buyers made up 30% of sales, still 30% on all cash. The share of individual investors or second home buyers was 16%. 26% of homes were sold to first-time home buyers. That remains at an all-time low. More expensive homes continue to be selling more briskly. Homes priced over $1 million saw sales activity grow by 8.3%. Over $1 million homes up 8.3%. But homes sold in that price range were uncommon. They only represent 8% of all sales. Big picture, the housing market is stuck. Well, I don't know if I buy it. First-time home buyers aside, there are few reasons for repeat buyers to dip their toes into the market. Home prices continue to climb higher. Mortgage rates are back to nearly 7%, double what many homeowners have on their present home. So the market appears to be frozen for the time being, at least until the Federal Reserve signals another cut in interest rates, which could send mortgage rates tumbling down. No chance. At this point, I am not predicting mortgage rates to be tumbling down. I think we are going to talk about being stuck. I think we're going to be stuck in the 6%, which is historically average over the last 100 years. I know these stats backwards and forwards. Remember, I have a huge background in real estate, having written 2 books on the subject. Well, authored, yeah, I wrote them for other people. Okay, so Tesla down $1.90 right now at $216 a share. It is ticking towards up. It's moving up from there. We've got the Dow Jones down 219.62, the NASDAQ down 110.35, and the S&P down 23.54. The Magnificent Seven, except for Microsoft, all down. NVIDIA down $3. Microsoft is up $2.21, and the Cathie Woods continue day after day to not be doing very well. PayPal and Square are up barely, and the rest are all down. Because why? Well, we'll get to that in a second. The Dow down 0.53%, NASDAQ down 0.60%, S&P down 0.39%, and Tesla down 0.8%. That would be kind of normal based on the market. In other words, about double to triple what the NASDAQ's doing. It's not even double. So in some ways, you could say it's beating the market this morning. It's actually outperforming slightly compared to what it normally does. All right, we're going to go take a look at the bonds now, which last time I looked was not a good story. And it continues to be a bad story. We're up 4.4 basis points today on the 10-year at 4.25%, which is what I said at the beginning of the show. We are up 3 basis points on the 2-year at 4.067. We are up 0.8 of a basis point on the 3-month and down 0.5. I'm sorry, the 3-month just changed, up 1.1%, 1.1 basis points to 4.636. So just taking a look here now at the 2-month and we're now down under 50 basis points in that split. So slowly but surely, that inversion has been collapsing. It was 150 basis points for a very long time. It was 120, 130. We are now down to 50. And how is it working? It's what we've been talking about that I don't understand quite as much as I should, but it's at least what the pundits in that bond industry have been telling us, is that when the inversion closes, it's going to be because the 10-year went up, not so much because the 2-month and the 3-month came down. And that's what we're seeing right now. We're seeing it live and in person. Okay. The oil market this morning, having gone up the last few days, is backing off this morning. Up 39 for Texas Intermediate, 71.34, up 48 cents to 75.56 for Brent. The difference being over $4 A lot of, yeah, not so much going on in the Middle East that I would think that would be the reason, but who knows? Natural gas up 4.48% this morning to 2.32. Natural gas is holding its own right now. It's been much higher, a couple of weeks ago, came down, but it's kind of holding its own right now. Gold down 20, 30, taking a breather from this run up to record highs. Same for silver, down 3.56% this morning at 33.8, $33.81. Copper down 0.72% this morning to 4.35, $4.35. Then we got the dollar up against the yen, 1.32%, strongly up against the yen, and down slightly, 0.22% against the euro. We have got Bitcoin down 727, back down to 66,757, down now at the low end of the upper set, or at the top end of the bottom range, if you will, that the crypto has tended to trade in recently. We'll see if it now continues to fall under 66 into that lower range of trading. Okay, there you go. You have heard it all. I am going to remind you, we got the Tesla is still down $1.88. I'm going to remind you again, not sure what I'm going to do midday, but I am going to have Brian Wang on. That will probably be published at about 5 o'clock California time. So that's what you can watch for it. I highly recommend you join me. Brian has a very good ability to look inside these numbers. I think you'll enjoy it a lot. And then what else do I want to tell you? Join Patreon. That'll be good. And then other than that, it has been great talking to you this morning.